All right, I'm back. What's going on, everybody? For some reason, I'm going on OBS. Where's my chat? Let's wait for more people come in. Um, yeah, thanks for joining. Yeah. I think I am. Okay, I had a little bit of di- technical difficulty at first. Okay, let's get right on to it. So yeah, what just want to see what everybody think about the market. Uh,
to hold until 2025. Top cryptos to hold until 2025.
On a Sunday evening, the SEC just reached out to Coinbase and said you have to stop all cryptocurrency trading and can only offer Bitcoin to your customers. Coin is a publicly listed stock, Coinbase's stock. Catch me tomorrow live 10 a.m. to talk about this. On a Sunday evening, the SEC just reached out to Coinbase and said you have to stop all cryptocurrency.
This is officially my biggest crypto prediction I've ever done. If you've been following me for a while, you know I have a very good track record. Like, I don't know, maybe almost 2 years ago telling we're gonna crash and everything went to shit. Screaming at you over and over and over again on my Instagram trying to warn you. Or maybe this year in January when I said we're probably going to hit $30,000 to $50,000 on Bitcoin. That we are in fact in a bear market still and it's just a bear market rally. Also warning you for 2 years XRP is going to win the lawsuit. We're here now in July of 2023 and I want you to know one thing. This is my next big prediction on what I think is going to happen to XRP. It is that I truly believe that this coin is going to overtake Bitcoin eventually. Now, a lot of people are going to be like, oh, it's just not possible. Let me break it down to you. It's fast, it's cheap, it's reliable, it actually has use case. Bitcoin is fucking worthless. It really is. Digital gold my ass, an inflation hedge my ass. XRP was the #1 cryptocurrency at one point in time, and I promise you it's going to do it again. Do 5 seconds of research and really look into this shit and you'll see the same thing I do. It's at 80 cents right now. I'm not saying it's going to go to Bitcoin's price. I'm saying market cap wise, it's going to be bigger than Bitcoin. And if you want to see everything we're doing with this coin, be on my Instagram. This is a prediction I've ever done. If you've been following me for a while, you know I have a very good track record. Like, I don't know, maybe almost 2 years ago telling we're going to crash.
It is time for the best part of my day. I drink a factor smoothie every single morning, and sometimes for lunch. When I first went remote.
Eighth, we need to rein in the Federal Reserve. It is not designed or supposed to be an economic central planner. It is not supposed to be indulging in social justice or social engineering. It's got one job: maintain stable prices. And it has departed from that with what it's done over the last many years. We're now in a situation where they've raised interest rates because they put us in this. And so now affording a home, your mortgage payment is like twice as much as what it would have been 4 or 5 years ago for basically the same home, given how much interest rates have gone up. So the Fed needs to have a limited role in this country. It's not accountable to the electorate. So the idea that it's going to take all this power and that we're all just going to be its guinea pigs, that doesn't work in a republic or a constitutional system. So I will appoint a chairman of the Federal Reserve who understands that, who understands the limited role that it has, and is going to focus on making sure the prices are stable for American businesses and consumers. We also will reject the Federal Reserve's attempt to impose a central bank digital currency on the American people. Now, what the Fed has said is, well, we're going to consult with the legislature, we'll consult with the executive, and ideally, we would get authorization from Congress. I think is what they said. No, it's not ideal. You cannot do this unless Congress authorizes it. I don't think Congress would authorize it. I would certainly veto that if I were president. But why do they want this? They want to go to a cashless society. They want to eliminate cryptocurrency, and they want all the transactions to go through this central bank digital currency. Now, why do they want to do that? Well, China wants to do it because they impose a social credit system on that. People at the World Economic Forum in Davos, some of these elites, they've said, yeah, if you have central bank digital currency, it allows elites to circumscribe purchases that they don't like ammunition, like energy, like all these different things. And so sometimes you have things that are proposed by policymakers that are kind of like a wolf's in sheep's clothing, that it may look okay on the surface, but underneath it you can see that it's a threat to liberty. Central bank digital currency is not that. Central bank digital currency is a wolf coming as a wolf. If you think that you can trust unaccountable elites to centrally plan our economy and have oversight over your economic decisions, and that's not going to end up being abused, then I've got some oceanfront property in Arizona I would like to sell you. So we see that this is a threat. In Florida, we've seen them talking about it, so I actually signed legislation where we don't recognize central bank digital currency. Now, Congress could override us on that, but the Fed unilaterally, I don't think they could override us on that, so we've protected Floridians. But as president, on day one, CBDC goes into the trash can. We're not going to allow it. And we are going to let Americans invest in things like Bitcoin and cryptocurrency. No one's forcing you to do it. If you want to.
So there you have it right there. Crypto news. Uh, okay, I guess I'm trying to bring you guys some of the latest news. So we have it, XRP. A lot of the market was red today. I'm trying to wait for more people to come in. I don't know. I guess nobody's joining today. I think I'm going to go ahead and end this live. Hardly nobody's really in here. I've been in crypto for about I'll say a few years. Yeah, I've been in crypto for a few years. But this upcoming bull run, this upcoming bull run, it's going to be the one. Yeah, yeah. This next crypto bull run, we gotta get ready. You know what I mean? We gotta get ready. We just gotta keep stacking our bags.
If it's not going to zero, it's going to a million. It's either nothing, right? If it's nothing, then it's getting scrubbed out and banned. And of course, we now know that it's not getting banned, right? There's no way that Fidelity, Citadel, BlackRock, Charles Schwab, Deutsche Bank, Credit Agricole, Banco Santander all decide they're interested in this, right?
Oh,
They're not endorsing a tulip bulb. If it's not going to zero, it's going to a million. It's either nothing, right? If it's nothing, then it's getting scrubbed out and banned.
Two really interesting bits of crypto news.
Okay.
The America's Best Celebrity Sale is here with picture-worthy designer frames at a fly price from Sofia Vergara.
You're in my shot.
Be sure to get my good side. Get 2 pairs of celebrity frames for $89.95 for a limited time at America's Best. Book an exam today.
All right, time for a mad dash. 2 minutes before we get started with trading here at the New York Stock Exchange. Where do you want to head? I've been
following the idea that we should have a stable coin, which is the way you can interact with crypto. Right now, it's been a couple companies that some people think are sketchy, but PayPal is launching, and now their PayPal had just an okay quarter, but to have their stable coin backed up by treasuries and currency and actual dollars is very big. And I say this because I've had the former head of the CFTC on twice, saying that they've got to fix this, and if they do it, the stablecoin, it is terrific. And Tim Massett's the fellow who I like, and this is really the possibility of very positive for
PayPal shares
crypto.
down 34% for the last 12 months, and if you go back 2 years, it is just
ever since the breakup with eBay. I thought it would not be significant, but it was
ugly.
And the decline has been horrendous, and you know that there's been activism. But for them to be able to do a stable coin may actually begin the discussion in Congress about how we got to start regulating it and not just having this angry match between Chairman Gensler and well, the industry. So I regard this as very positive. Now, JP Morgan is not going to do it.
JP Morgan is not going to
doing a stable coin.
Right.
Since I've actually asked them, I just said, are you kidding me? But this is very important. And I think that PayPal is the outfit you'd like to switch to. I mean, I would, if I were doing crypto right now, I'd switch to PayPal. I'd put my money with them. There you go. That's what I do.
Our mission in Coding Dojo is about redefining what's possible in our students' lives. If you are interested in getting into tech, we are 100% behind.
A lot of times when Jim Cramer says stuff, you always want to do the opposite. He'll always steer you to the wrong direction. Jim Cramer, he's a that guy. That guy's ridiculous.
For more on where the markets go from here, let's bring in David Rosenberg, founder and president of Rosenberg Research. David, great to have you with us. You say it's silly season these days for the equity markets. Why is that?
Well, I think it goes back to the comment that was just made about valuations. So I understand the momentum aspect of this market and the technical aspect of it, and we could debate the soft landing or hard landing. I would say that even if you have a soft landing or no landing view, let's face facts. You have a 20 multiple on the S&P 500 on forward earnings. That's a 5% earnings yield, and you can pick up 5.5% in the treasury bill market with no cyclical risk, no duration risk, no capital risk. So I would say that, when you do the math, it's a very expensive market, no matter what your macro view is. And so when I'm talking about silly season, it's one thing to have a 20 multiple a couple of years ago when rates were at zero. But today, the equity risk premium has only been where it is today less than 10% of the time in the past. So the valuations are extreme. I'm not going to say that they are dot-com level extremes, but we are in the top 10% of valuation excess that we've had historically, and I think that's a warning sign.
How do you see this playing out then? It does seem like so many people are all of a sudden, moving to the other side of the boat, so to speak, in terms of soft landing scenario, no landing scenario. They're jumping on board. We see strategists bumping up their price targets for the S&P 500 by year end. I mean, it just seems that all of a sudden everybody's getting really bullish just when you say silly season is starting.
Well, I guess it's the benefit of having done this for 40 years. So you see what happens is that the market takes off for whatever reason. And then you get the analysts and the economists and the strategists then scurrying around trying to fit the narrative into the price action. Sometimes the stock market's going to do what it's going to do. We go back to 2007, for example. I mean, nobody really had a recession in their forecast, and everybody was talking about, where's the recession? We had the inverted yield curve. The lags are extremely long. As we had back then, as we had today, we had a very expensive market on our hands. And at the same time, we had a ripping rally, from the summertime of 2007 to the October 9th high. The market absolutely ripped, and everybody's scratching their heads. Of course, we know what happened next. And so sometimes people just fit the narrative to the price action, because what else are you going to do? But we all know that the market is this malevolent beast, does not always respond to valuations. It's not a timing tool. It doesn't always respond to the fundamentals. It just sometimes takes a head of its own, and it's called animal spirits. The reason why the term animal spirits is around is because that's what happens when we have a momentum-based rally, which we've had for the past several months. I mean, the one thing I would like to ask the group is this, that when the Fed is cutting interest rates into a bear market, all you ever hear is, don't fight the Fed, don't fight the Fed, don't fight the Fed. And valuations matter. The market's cheap. But on the other side of the coin, the Fed is tightening policy, and they really haven't signaled that they're done yet. You don't hear anybody saying don't fight the Fed anymore. And now nobody talks about valuations. So it's just
Guy Dowdy says it, Rosie. But quick question for you. In your note, you said discretionary spending in real terms barely expanded in Q2. And you talk about the market recognizing things and not. When we talk about a name like Disney or Starbucks or Nike, they're barely up. They're unchanged on the year. The market is recognizing, I think, the fact that you're kind of putting out here about discretionary spending. Will a recession be started by a consumer slowdown, even with the backdrop of the jobs picture, which seems kind of confounding? Or might it start from something on the enterprise level?
I think it's going to start at the consumer level, and I think that we'll see the first signs of this after the student loan forgiveness program ends in the coming month. And so I think that it's going to be consumer led. I understand that the frustration amongst the bears, and I've been on this show before, and the question is, where's this recession already? Where's this recession already? But the thing is that interest rates do work their way through long lags. And what's happened this year, 100% true, we've had tremendous fiscal stimulus. But that's going to term out before the end of the year. What's not going to go away are the lags from these interest rate increases. And even if John Williams says, well, rates will come down next year, the question is by how much. The economy hasn't reset yet. And I did this work looking back historically. Only a handful of times has the Fed raised the funds rate 500 basis points or more in less than a year and a half. I mean, this is a significant rate shock And we haven't seen the full impact yet. But what I'm going to tell you is that after the 500th basis point increase in the funds rate, and it hasn't happened that often, okay, it's 6 months till the recession. And in that 6-month period, we're in purgatory. We don't know where we are. We're just asking questions. Where's the recession? But unless you believe interest rates don't matter in the most credit sensitive economy in modern history, or you believe the business cycle somehow been repealed because we've had a year where fiscal policy did have an impact, it is not going to be big enough to offset the lags from these interest rate increases. Mm-hmm. So I think that by the third or fourth quarter, we're going to start to see more evidence, but it's going to come out of the consumer side, not the corporate side. But there will be spin-off effects. But this is going to be a consumer-led recession. I think will ultimately be more severe than people think into 2024.
Hey, Buck, yeah, I agree with you. I think PayPal getting in, that's gonna get more people the FOMO into the crypto market. Yeah, so I kind of agree with you. Yeah.
All right.
Right here. But yeah, I'm just having a feeling that here we go. I'm just having a feeling that the market to get scared out of our plays. Hey, what's going on, Jeremiah? How you doing?
Today, PayPal begins rolling out its US dollar-backed stablecoin. Global X refiles for a spot Bitcoin ETF, and Brent Shu of OMI breaks down the outlook for altcoins as US regulatory uncertainty lingers. Welcome to CNBC's Crypto World. I'm Kate Rooney. Digital currencies on the decline through the weekend and into Monday morning. By noon Eastern, Bitcoin traded below the $29,000 level, and Ether traded just above $1,820. Meanwhile, Shiba Inu coming back down from a weekend rally. Okay, let's talk about some of the top stories. First, PayPal just launched its stablecoin. The company announced that PayPal USD is issued by Paxos, and it's rolling out to customers starting today. It's fully backed by US dollars, US treasuries, and similar cash equivalents. Users can use PayPal USD to send payments, pay for certain items at checkout, and transfer the stablecoin to external wallets. Today's launch comes after PayPal initially paused development of its stablecoin back in February due to regulatory scrutiny. Next, Global X is jumping back into the race to bring a spot Bitcoin ETF to the States. The firm refiled its proposal for a spot Bitcoin ETF to be listed on the CBOE. And just like many of the other spot ETF proposals under review by the SEC, Global X lists Coinbase as its surveillance sharing partner. One of the chief criticisms by the SEC when rejecting past proposals was lack of certainty that issuers could avoid market manipulation. Firms like Global X and BlackRock are hoping Coinbase's surveillance of Bitcoin trading can help quell some of those fears. Last, Kenyan officials have reportedly raided a WorldCoin warehouse in Nairobi. According to local outlet Kaha Watungo, multiple agencies executed a search warrant at the facility and left with machines that stored customer data. Kenya halted WorldCoin's operations in the country last week, citing privacy and security concerns. We reached out to WorldCoin for comment on this report, but haven't heard back yet. All right, let's turn back to the markets for our main story. Altcoins have swung wildly in 2023 as regulatory uncertainty and industry-wide uncertainty have weighed on investors. But what's next for cryptocurrencies not named Bitcoin? Crypto World's Jordan Smith spoke to Brent Shu, founder and CEO of OMI, to find out.
Bitcoin has gotten a lot of attention this year for its performance, the spot ETFs, and all of that. But I want to talk about altcoins today. Where are altcoin investors this year? What does the sentiment sort of look like for the space?
The way to look at this perspective is that Bitcoin is, in many ways, the index for crypto, and the various altcoins coincide with the price of Bitcoin. And you can see increased beta related to these altcoin performance. You can separate altcoins into different categories. On one end, there's different derivatives of Ethereum like Avalanche, Polygon, Binance Smart Chain. On the other, there's L2 solutions like Optimism, Arbitrum, and a whole slew of other L2s that are coming out from the Rollup ecosystem. And then you can also look at alternative base layers like the Solanas of the world, the Polygons, the Cardanos, even looking at XRP. And then separate from that, look at DeFi. So when looking at altcoin performance, you'll see that Bitcoin initially has its rallies, followed by altcoin performance as the market re-enters the space and develops stronger conviction for a lot of these new assets.
As you mentioned, there are a bunch of different altcoins. There are a bunch of different use cases for these tokens. But I think one point of commonality maybe this year was that some of the ones that you mentioned were implicated in SEC lawsuits, Solana, Polygon, and the like. And some of them were even delisted from exchanges. How much is U.S. regulatory pressure weighing on these tokens, if at all? I mean, how much is that actually hurting prices, or is it just general lack of investor interest that's really directing how little some of these tokens are moving?
When it comes to regulations, it's important to understand that the Overton window related to a lot of these crypto assets is shifting in this side of the regulations. We see that there's constantly a regulatory battle between discussions of whether a token is considered a security or if it's not. I think the key to figuring out this ecosystem is actually defining a certain set of standards, some applicable laws that can better define how we treat these assets from a regulatory perspective. You're correct that a lot of the altcoins mentioned were implicated. That being said, these are just initial implications. What happens further down the line is another consideration for how regulators and the projects themselves should be interpreting how best to operate in this ecosystem.
Yeah, I feel like the initial reaction from some of these rulings was that, like, okay, it's done, it's been decided, like we can all move on. But really, this is the start of a very long process, not just for appeals, but for the larger regulatory environment in the US. Is that going to weigh on these tokens, particularly like XRP or Solana or Polygon, who have maybe been caught up in this battle? Or is this something that eventually investors will move on from, especially if they don't see any movement?
I think Brian Armstrong tweeted this morning that there's no way that crypto or a lot of these organizations are going to officially leave the U.S. because when looking at broader market ecosystems, the U.S. is one of the most important, if not the most important market to be able to operate in, because it really sets the gold standard for how different types of assets can exist in a cohesive ecosystem. Basically, the U.S. sets the stage for a lot of these capital market frameworks. I'd say other jurisdictions have their own ideas on capital markets regulations, but as crypto becomes more mature and develops better frameworks for how it operates as a new form of asset class in the broader market environment, the U.S. is going to be an important ecosystem to define the rules in and to establish the right opportunities and frameworks for how these assets should be implemented. And so to sum up, I'd say that it's going to be a long battle, but it's well worth it considering the amount of access and the amount of users in the U.S.
Let's take a bit of an optimistic angle here too. What are the areas of strength right now? Is it tokens that have a very clear utility? Is it some of those layer twos or some of the Ethereum competitors that you mentioned earlier? Or is it meme tokens like Shiba Inu? I mean, that had a huge rally over the weekend. Where are investors seeing real positive growth right now?
The real strength is in fundamental platforms that exhibit strong characteristics of technological innovation. The way that you should be looking at some of these altcoins is that they're really like a call option on the success of the technology being proliferated in the broader ecosystem. That being said, I have seen the altcoin rallies. I have seen different meme coins. I'd say that these are somewhat they don't really indicate direct use cases, but rather they're just a temporary buzz that happens in the ecosystem. Once the main blue chip assets develop the right infrastructure and functionality for the broader ecosystem, you're going to see more value accumulation to them. And I'd say that that's going to be the driver of the next crypto bull run as we approach 2024, which will be election year. So expect lots of volatility going into that segment.
Yeah, I'm glad that you brought up the next bull run. That was going to be my next question was what are going to be the driving factors for that? And ultimately, I guess the question for me is when you're looking at investor interest at the start of that next bull run, is it going to head towards the Bitcoins or even Ethereum as the major altcoin? Are those going to take the oxygen out of the room, so to speak, and really drive investor interest before some of the other tokens?
It's very difficult to deny the dominant network effect of Ethereum, not just Ethereum tokens, but also EVM sidechains as well as L2 solutions. As we see more rollups emerge as L2 solutions, so I was at EFCC in Paris a few weeks ago, and it was definitely L2 season, where different networks were launching their own L2s for the broader crypto ecosystem. And so I'd say that Ethereum is going to take a major part of that stage on the next bull run.
Okay, that's
Yeah, I totally agree with you guys. Yeah, we definitely need to get Biden out of there. You know what I mean? Yeah, he's no good for the community. All he want to do is just end. He just wants to end the. He just wants to end our crypto community, pretty much. That's all, pretty much, he wants to do. Yeah, but yeah, guys, that's all right, guys. Guess I'm gonna go ahead and end this live. Um, which I would have had a better turnout, but it's all good. It's all good. Thanks for everybody who tuned in to the live. I really just wanted to show some crypto news, so what's going on, the whole thing with PayPal, recent pullback. But I think within the next week or so, I believe the crypto market is going to pump. That's what I highly believe. I believe we're going to get a pump. Yeah, but yeah, thanks everybody for tapping in. I'm gonna go ahead and get out of here. Hey, I'll see you guys tomorrow. Well, technically today it's already Tuesday, but I'll see you guys later on today. Take care.